Ever feel like your dream home is just this elusive goal, always just out of reach? House prices are skyrocketing, and let's be real, the traditional 30-year mortgage? It's starting to feel like it just doesn't cut it anymore for a lot of folks. You look at listings, you run the numbers, and month after month, it's the same story. The payment's just too high. But what if I told you there's another option out there? A way to lower those monthly payments and maybe even snag a bigger home? Today we're diving into the world of the 50-year mortgage. We'll break it down, chat about who it's really for, and uncover some hidden secrets you absolutely need to know before even considering it. Is it a golden ticket to homeownership or just a financial trap waiting to snap? Let's find out together. So what's the main appeal of a 50-year mortgage? It's pretty straightforward: lower monthly payments. By stretching that loan over half a century instead of the usual 30 years, your monthly bill drops significantly. Think about it. For first-time homebuyers in pricey markets, this could be a total game changer. Suddenly, that house that felt completely out of reach might actually fit into your budget. Maybe you've been stuck in the rental cycle, watching prices climb while you save, and this option finally gives you a shot. It's like opening the door to a whole new world of possibilities for people who might not qualify for a big enough loan on a shorter term. It's all about making that initial purchase more accessible. The math is simple. Spread the same amount over more time, and each payment gets smaller. But hold on. There's a catch, and it's a big one. Let us get into the numbers, because this is where the reality of a 50-year mortgage really hits home. Imagine you're taking out a $400,000 loan. Now let's talk about one of the biggest drawbacks: the painfully slow buildup of equity. Equity is the part of your home you actually own, and it's your key to building wealth. It's what you get to keep when you sell. It's what you can borrow against in an emergency. With a 30-year mortgage, you start building equity at a decent pace. After just 10 years, you've made a solid dent in your principal. You're actually chipping away at the amount you borrowed. But with a 50-year mortgage, your early payments are almost entirely interest. After a decade, you might find you've barely paid off any of the original loan amount. Think about it this way. For the first decade or two, a 50-year mortgage can feel a lot like renting. You're making those monthly payments, but you're not really building any significant ownership stake. Your home isn't becoming an asset in the way you might hope. Sure, you've got a roof over your head, and yes, it's technically yours, but on paper, the bank still owns most of it. This is a critical point to understand. Homeownership is often pitched as a fantastic investment, a way to grow your net worth while you live somewhere. But with a 50-year term, the investment aspect is severely delayed. If your goal is to build wealth through real estate, this type of loan could work directly against you for a very long time. You're pouring money in, but you're not getting much back in terms of actual ownership for years and years. Another major concern is the sheer length of the commitment. 50 years is a lifetime. Think about where you were 50 years ago, or where your parents were. A lot changes in that time. Many people who take out this loan will be making mortgage payments well into their retirement years. Can you imagine trying to live on a fixed retirement income while still having a monthly house payment? That could create some serious financial strain when you're supposed to be enjoying your golden years. Most financial advisors will tell you the goal is to be mortgage-free by retirement. With a 50-year mortgage, that's nearly impossible unless you took it out in your 20s. Financial planning becomes absolutely critical. You've got to have a rock-solid plan for how you allow manage this debt over the long haul. Without one, you're setting yourself up for potential hardship later in life. You need to ask yourself, where will I be in 20 years? 30 years? Will I still be earning enough to handle this payment comfortably? Now, is there ever a good reason to consider a 50-year mortgage? Proponents argue that it has its place. For some buyers in extremely high cost of living areas, places like San Francisco or New York where even small homes cost a fortune, it might be the only way to get a foot in the door. The idea is that you can get into a home with those lower payments, and then as your income increases over the years, you have the opportunity to refinance into a shorter-term loan like a 30-year or even a 15-year mortgage. This strategy relies on your career and income growing steadily, which is never a guarantee. It's a calculated risk. You're betting on your future self to fix the financial burden you're taking on today. You're assuming promotions will come, raises will happen, and your earning power will rise enough to make refinancing realistic. But here's the thing. This strategy also assumes that interest rates will be favorable when you're ready to refinance. If rates go up, you could be stuck with your high-interest 50-year loan for much longer than you planned. Maybe rates are 7% now, but in 5 years they're 9%. Suddenly refinancing doesn't save you anything. It's a gamble. You're trading immediate affordability for long-term risk and a much higher total cost. Before jumping in, you really need to ask yourself if you're comfortable with that trade-off. Are you disciplined enough to make extra payments towards the principal to speed up the process? Do you have a clear career path that suggests significant income growth? These are tough questions you need to answer honestly. If the answer to any of them is no, or even maybe, a 50-year mortgage probably isn't the right move. So let's recap the good, the bad, and the ugly. The good lower monthly payments make it easier to afford a larger loan and get into the housing market. It opens doors that might otherwise stay closed. The bad. You'll pay a staggering amount of interest over the life of the loan, and interest rates are typically higher than for shorter terms. We're talking $1 million or more just in interest. And the ugly. Equity builds at a snail's pace, leaving you with little to no real ownership for decades, and potentially making it difficult to refinance or sell. Plus, you risk carrying this debt into retirement, which can completely derail your financial security when you need it most. Before you even think about a 50-year mortgage, you need to do a serious evaluation of your financial situation and your long-term goals. Is your primary goal just to get into a house, no matter the long-term cost? Or is it to build wealth and financial security? Consider all the alternatives first. Can you save for a larger down payment to reduce your loan amount? Even an extra $20,000 or $30,000 down can make a real difference. Can you look for a more affordable home or in a different neighborhood? Maybe a place that needs a little work but gets you in at a lower price point? Could you find a cosigner? These options might be more challenging upfront, but they could save you hundreds of thousands of dollars and years of debt. Ultimately, the 50-year mortgage is a tool, but it's a very specialized and risky one. It's not for everyone, and for most people, the traditional 30-year mortgage is a much safer and more financially sound choice. It's crucial to understand the long-term implications of your mortgage choice. It's one of the biggest financial decisions you'll ever make. Don't let the allure of a lower monthly payment blind you to the massive long-term costs. Be informed, be careful, and always plan for the future. Thanks for sticking with me through this deep dive. I hope this gave you a clearer picture of what a 50-year mortgage really entails. If you found this helpful, hit that like button and subscribe for more content on making smart financial decisions. I'd love to hear your thoughts on these ultra long-term loans, so drop a comment below. See you in the next video.